Hello, Matt. How's it going? You had a little bit of a false alarm yesterday with, potential birth of your sixth child. I hope you don't mind me sharing it. It's hopefully coming soon, though. But I almost thought I'd be doing this today alone. But I'm glad you're with me.
Yeah, it was a little hit or miss for a while there. It was actually my firstborn. She had her 10th birthday yesterday, so we thought we may be sharing birthdays for a while there. But
Hmm.
baby decided to hold off a little bit longer, so yeah, we're still on alert for the next kid, but don't know
Yeah.
when that'll be now.
All right. Well, for everyone listening on Twitter Spaces or YouTube Live, it's being broadcast live on both at the same time, being recorded on both. And we'll just jump right into it, I guess. We usually start with the macro stuff. I think the first top thing is, in our mind, we both texted each other this weekend and we're like, the elephant in the room seems to be, that Putin and his access to nuclear weapons. And sure enough, on Sunday and yesterday it was brought up, but we wanted to put our hedge on like Saturday, just because we were like, wow, if Putin's getting humiliated enough, like, what does a bully do when they're humiliated, right? So, what are your thoughts about Putin and the potential of nukes, or a nuke being, set off? I mean, what do you think? I know we've both researched it, and probably seems unlikely, but what do you think?
Yeah, it is funny because I had been thinking about it a lot, like on Saturday morning, basically, and then you texted me that I think like 2 hours later, and it's funny how we were kind of thinking the same thing. I mean, yeah, it certainly is an unlikely outcome. I want to make that kind of very
Yeah,
clear. I mean,
unlikely for sure.
all the kind of experts commentating on it, think it's highly unlikely, but at the same time, I think all the experts also thought kind of an invasion of Ukraine in general was unlikely, and probably particularly one where they were marching toward, Kyiv. There was a lot of thought that they would just kind of target these breakaway regions, as they're called, quote unquote breakaway regions. I don't even want to call them that,
Yeah.
but in eastern Ukraine. But instead, they're kind of shooting right for the heart of the government, and kind of blatantly trying to overthrow the government. So that seems to be firing back. I mean, the pushback that they've received, obviously from the Ukrainian on the ground forces, is a lot more intense than they thought, but also from the international community. I mean, the sanctions, and what you're seeing with the ruble just plummeting, and the Russian stock market remains closed, even though it was down like 40% by Friday. I think it was more like 30%.
Crazy. Yeah.
So you can
Things are
imagine, though, if
capitulating in Russia. Yeah.
yeah, and that was before all the sanctions over the weekend. So
Yeah.
you can imagine if they did open the Russian stock market today, I mean, it might be down 50% even from these depressed levels.
Yeah.
Because so there's a real kind of liquidity crisis. There's potential for like a bank run. Inflation is going to be rampant. So I think this really backfired in a way that Putin was not expecting. And so yeah, my thinking is like I'm kind of glad about the reaction that we've seen from the international community, and the staunchness of Russian or of Ukrainian defenses. But when you've got like a wild animal backed into a corner, they're prone to do something more rash and more risky. So
Yeah.
I do think it's at least a possibility that you have some kind of extreme, uh,
Reaction.
attack on the civilians.
Yeah.
And we've already seen it. I mean, there's increasing reports of kind of bombing of just like blatantly civilian targets, both
Yep.
in Kyiv and in Kharkiv. There were reports of these thermobaric bombs being used, or warheads being used, which is essentially like a vacuum bomb, which will like explode your
Yeah.
lungs from the inside. And reports of more of those being moved around. So it seems that this situation could deteriorate quite rapidly. And my thinking is, if there was some sort of you know God, I really hope it doesn't happen. But if there was a nuclear bomb, for example, used on Ukrainian cities or something like that,
Yeah.
it would be obviously most importantly devastating for those people. So like, but let's not lose sight of the human element here. But
Yeah.
since we're managing people's funds here, I think we kind of need to protect around that. So I think it's fair to disclose that we did put on a hedge, in the unlikely event that this happens, just with a small percentage of the portfolio's funds.
Yeah. Yeah. We just put if it happens, we were thinking it's going to happen the next few days or a couple weeks. And, it'd be so horrible. Like, it's almost like, when I put the hedge on during when COVID was coming, I was like, I felt awful about it. I don't want to make money on suffering of the world, but I had to protect my wealth, and I wanted to put a hedge on just in case it really became a big hysterical event, which it did. And it didn't lead to as many deaths globally as I thought it could, luckily, but the market still collapsed quite a bit temporarily. And a nuclear thing could be a magnitude worse, an order of magnitude worse than, in terms of human death, and it'd be so horrible. Like, I don't, but we do have a responsibility to hedge ourselves, our portfolio for our investors and such too. And maybe it's in our mind, we're thinking maybe like somewhere between like a 5 and 20% chance, which is not tiny, and it's somewhere, but maybe it's as low as a 5%, but maybe it's as high as a 20% chance in my mind that Putin figures out some way to detonate it. And, I've seen some recent analysis that there's like this chain of command. So it's unlikely because, one military officer has to approve it, then like someone else has to approve it. But I could also, Putin, he's no dummy. He knows that, maybe these people are going to be resistant. He might get them all into a room with like knives at their necks and be like, all right, I'm pressing it. You do yours. You do yours. Who knows what he's doing? He could be a madman. He might not be a madman. Maybe he's a rational actor. I don't know. We don't know what we don't know. And, the 50% chance he's rational, that's great. But the 50% chance or whatever that he's a nutcase and a maniac with, health issues at this point, mental issues, you just don't know what he could do then. And it's scary.
Yeah, and just to be like, I kind of disagree with you on the probabilities, to be honest. I think it's more like a 5% rather than like a 5 to 20% range. But even still, I mean, if that were to happen, then it's not only the immediate devastation, but you could imagine a lot of the Western allies would feel an obligation to intervene.
Yeah.
And so then do you have some sort of, if nuclear weapons had been used and now you've got, nuclear powers facing off against each other. I mean, that could have disastrous consequences. I mean, that sort of event is why Elon thinks like having a colony on Mars is a good idea. Like like we're not too far away from, people realizing, oh yeah, you know what? There's too great a probability of the wrong people, making the wrong decision. So
I mean, I hope it's a 5% chance, but I think 20%. I say the range of 5 to 20 because the more Putin gets humiliated, in my thought, is the more he's humiliated on an international stage and amongst his own people, the more likely he knows he could be overthrown. His main goal is survivorship himself. And the only way he survives is to stay in power. The moment he's out of power, he's either going to be killed or put in prison. He's got war crimes. He's not surviving unless he stays in power. And so his last option to stay in power might be set off even more chaos, whatever way he can. So that's why I'm worried about the higher end of the risk tail, the tail risk here. If he gets more humiliated than he already is, that's what I'm worried about.
Yeah. Vuk, who we had on this channel, had a really great thread on this a while ago. Basically talking about like his goal is really just to make sure that he maintains his power within Russia. But like even then, there's a sense that like things are not going to go back to the way that they were even just 1 week ago. Like you can't imagine Putin overseeing like the Olympics again, like he did in 2014, for example. Like he's just become overnight like a huge international pariah, where this is kind of like an unforgivable sin that he's committed. So yeah, I mean, I think his best chance is to kind of like maintain some sort of like diminished dictatorship, kind of like you see in Syria with gosh, I forget that guy's name, but like he used to be somewhat of an international figure.
I know who you're talking about.
Yeah.
But look, like his name. Keep going.
Yeah, so his position is diminished, but like he still maintains authoritarian power over like this crippled, economy, this crippled country that's just like a fraction of what of its former glory.
Bashar al-Assad was his name.
Assad, that's right. Yeah.
Assad.
Yeah, and so like I think like Putin's best option here is just that this kind of de-escalates somehow. I mean, I think he probably needs some sort of claim of victory, like whatever he can just say that he expelled the Nazis, like whatever like nonsense they're doing right now.
Yeah.
But claim some small victory and maintain power. Like I think that's all he really wants. But at the same time, he's not backing down in the least. So it's very unclear, how far he's willing to go.
Yeah, I know. And you got to wonder, like, a lot of people are speculating on potential health issues. There's a picture out recently of him at one end of a long table and his military advisor's like 50 feet down at the other end, and he's like keeping his distance. Maybe he's immunocompromised, or does he have some serious health issue that he's taking maybe some drugs or steroids for that make him act a little more aggressively or emotionally? And, or maybe he's just doing more recreational amphetamines or something. A lot of famous, world leaders and dictators over the last century, we've discovered we're taking lots of crazy drugs, and we're partly responsible for aggressiveness. So I don't know. I mean, what's up with his health or his mental health, or is there some drugs? It's hard to say.
Yeah, I hesitate to speculate on whether those issues are going on, but that was clearly an issue, like with Hitler, and it's kind of astonishing, the parallels to Hitler now at this point, which is, he's going in there to fight against like the Ukrainian Nazis, and here he is, kind of like replicating the playbook from Hitler. And like, I don't use Hitler comparisons lightly, because I think those are just generally overused. But in this situation, it seems pretty appropriate.
Yeah, yeah,
But yeah, regardless, like, he's clearly in an echo chamber where, like, people who push back and say, "Hey, boss, that may not be a bad idea," like, that can be bad for your health in in Russia and Putin's close circle.
yeah,
So yeah, I think there's a hesitancy to really convey the truth. And like, I've heard a lot of the Russian kind of puppets talking on. I was actually I was trying to get neutral coverage of this, so I was listening to some Indian coverage,
mm,
and they had like somebody from Ukraine's parliament, and they had someone from Russia speaking, and it's just like the dissonance in the Russian mindset here is like crazy. Like the whole the only thing they've been able to say is like, oh, nobody wants war, Russia doesn't want war, Ukraine doesn't want war, but this just kind of has to happen. And like, look at what America did. This is what, like, there was a lot of
yeah,
whataboutism. What about America? What about like all the things that you've done wrong? And it's
yeah,
like, oh, okay, but that doesn't justify your current actions. So there's really no logical leg to stand on that the Russians have here. So I'm hoping that there's more kind of internal pushback to this within Russia that continues to grow over time.
yeah.
But
Yeah. A couple things I want to mention also is I saw someone ask about, our hedge, what specifically. So, yeah, I mean, we like the index hedges of, we imagine like worst case scenario if a nuke bomb goes off, somewhere, and how catastrophic that would be. And the market, we think, could gap down immediately like 15 to 40%, like global, somewhere in that range, could just gap down like crazy, and just out of panic. And so we bought some out of the money puts on the NASDAQ and S&P 500 with a very tiny percentage of our portfolio. I think like 2% of our portfolio or something like that. And we did the math over like, two week out expiry. So if it happens in the next 2 weeks or whatever, if the market did gap down like 15%, then our portfolio would be, mostly flat. Or if it gapped down further, we'd make money on it, actually. But if it only got down 10%, then we might lose, half as much money as we otherwise would, for example. So that's sort of our thinking. But if anyone who's, you just have to understand what puts do and do the hypothetical calculations yourself. If the prices go down to this, how much money would these puts be worth at that time? And then you can figure it out. It should be simple, or your broker can help you figure it out if you wanted. But um, and that's the hedge we put on, just because we think the next 2 weeks could be very volatile anyway, but especially if this worst case scenario happens, which, very low, unlikely, but certainly a possibility that we don't want to ignore. And the other thing I wanted to mention, Matt, is that we were talking about information, where we're getting our information. And there's some really great Twitter spaces you and I have been listening to. And I don't know if we can retweet it later, but there's one in particular, this guy, Walter, who's like Ukrainian, put together, and it's got like a few thousand listeners, a few military guys and engineers. It's way better hearing these people that are like on the ground, engineers, so, just people have a better, versus like liberal arts journalists from the BBC or the New York Times or Bloomberg, even, talking about the news that they're gathering. I feel like it's much more meaningful to hear the analysis of the latest, events coming by these folks that are actually experienced in war, or they're on the ground in Ukraine and kind of have an engineering mindset, versus, journalistic, liberal arts mindset. I don't know. I think we can retweet that after this, so people who are interested in getting the latest news, if they're not aware of it, can follow that Twitter Spaces too, because it's been going continuously for like 6 days straight now. It's pretty
Yeah,
impressive.
it's been phenomenal. I mean, there's different hosts that come in and out of there, so it is kind of different spaces from time to time. But yeah, if you look like Russian invasion of Ukraine, I think that's the one that's on right now, and it typically that's the title of it.
Yeah.
But it's phenomenal because I've actually had a subscription to the Wall Street Journal for a while now, and I try to stay abreast of what's going on there, but like I was reading the articles and it was like they have the same article up all day long and they change like 2 or 3 words here or there. And it's just like, and it's like all this color commentary that's not like actually like live updates of what's happening. And then you go on this Twitter Spaces by comparison, and it's like people are kind of crowdsourcing information, saying like, okay, I'm seeing this, a cargo plane coming in from Spain or like something like that. Like there's people kind of tracking that level of detail and,
Yeah.
commentating on what I think has been the most eye-opening to me is just the military guys in the room commenting on how poorly managed the Russian forces have been, and just kind of like the lack of operational awareness and the very basic kind of like blocking and tackling mistakes that the Russian army has just continued to make. So, that's the kind of insight that I haven't seen in the traditional media that I think really gives a lot more kind of more granular detail of what's happening and how the next 24 hours at a time are maybe likely to play out.
Yeah, absolutely. And I think this potential invasion, this, whatever this is, changes the future a lot in terms of even China's calculations to potentially invade or to try to take over Taiwan. The pushback, the international outrage that so quickly spread from the advent of the internet and social media. And now Elon Musk sending Starlink terminals to Ukraine. So even if Russia tries to shut down, the internet, people who have generators or whatever can still get the internet and get free information out to the world of what's going on there and such. So I think this is a new world, and that's the silver line I see. And whatever happens here, there's no easy takeover of a sovereign country anymore that doesn't want to be taken over. Like maybe in the old days, you could suppress the communication so it couldn't get out to the outside world of all the suffering and terrible things going on. But today, it's a different world, and hopefully that's the silver lining I see here, that the international community, hopefully everyone in the world who would otherwise, think of trying to take over some other territories, realizes that maybe it's not so easy now with everyone having access to all the information kind of real time of what's going on.
Yeah, I don't know. I'm not sure that it necessarily applies to the China Taiwan situation. I think there's a little nuance there that we probably shouldn't go into here, but
No, it
I do
won't.
agree
It's
with
more
you that
complicated, I'm
in
sure.
general, though, that this is kind of a sharp contrast or a sharp lesson, I think that a lot of countries could learn from. One of the surprising things to me, though, has been kind of the how swift these sanctions have been, and even like historically neutral, going back to World War II countries like Sweden and Switzerland in particular, are joining these sanctions of Russian banks and financial institutions. And so, like, if you thought your money was safe in a Swiss bank account and you're a Russian oligarch, and all of a sudden you're finding out actually that might not be the case. And I saw somebody's like yacht was some Russian oligarch's yacht was sunk, like in some European port.
I saw that.
And so I don't know. And you've actually, like, just this morning, you saw Bitcoin and a lot of the cryptocurrencies really kind of jump when a lot of the broader markets were down. So there was kind of a breaking of that correlation that we've talked about historically. So I could see this being a kind of a boon to cryptocurrencies in general, because whoever you are, whether you're a company, an individual, or a country, or like a central bank, and you want to protect yourself from sanctions or just a deterioration for whatever reason in the kind of international financial system, it does seem that having some portion of assets in cryptocurrency could be a hedge against the type of actions that we've seen from the international community here. So Brett Winton had a good couple tweets on that, and it kind of surprised me, actually.
Yeah. And Nassim Taleb has had a lot of really interesting tweets for people that don't follow him. He's provided a lot of he's one of the most high signal to noise kind of ratio tweet people I see. A lot of times he puts out these like mathematical things that are a little too far for me to get into, but a lot of times his commentary is very interesting. If anyone doesn't follow him, Nassim Taleb, author of The Black Swan and some other great books. And I mean, I feel terrible also. Let's not forget about the Russian people. I think the majority of the Russian people are not in favor of this war, I would think. I mean, or a large percentage, the more that get information, understand like this is not good. They're not blinded. If they're not blinded by the propaganda within Russia, which I don't think they are as much anymore, then they have to realize this is not looking good. There's riots or protests. I mean, in the streets, thousands of people getting arrested, bank runs, like you said, and even the Russian soldiers. Like I feel like there's been all these anecdotal stories of Russian soldiers just giving up because they're like they're these conscripts that are just basically soldiers hired to like go like forced to go into like war. They were told they're going to do like a military drill apparently, and then they're like marched into Ukraine, and suddenly Ukrainian soldiers like bombing them, and like one of them, this phone was found after he was dead. There was text messages to his mom saying like, this is much worse than I thought. I thought I was just going to a drill. The Ukrainians are not welcoming us like we were told, like we don't want to be here. And then the soldier's dead, and you see his phone there with the text messages to his mom. Like these soldiers, poor soldiers, like I don't think most of them want to be there, and they're being like ordered to go in. And you just feel for everyone. I mean, it's really a sad situation, but I don't, it's something we're gonna continue following. And
on this this spaces we were just listening to right before we went live. I mean, there was a woman on the ground in Kharkov, I think it is. Apologies, my Ukrainian pronunciation is terrible, but she was just crying on this spaces, talking like you could hear the fear in her voice, saying like they're trying to kill us, they're trying to eradicate us all. And I think it's pretty clear that like the Russian forces don't really have the appetite for like a ground to ground or like a street fight. That's not going to go well for them. But what I think the forces are capable of carrying out is park your MLR, your multiple launch rocket system a couple miles away and start bombing city centers. That's a little bit less personal, and it's devastating to the population there. So kind of hearing firsthand just like the pain and the horror in her voice was a good reminder that this is, first and foremost a human tragedy. And of course, this is an investing channel. We want to cover that aspect of it, but that's a small aspect of the whole situation when you're looking at it from a human level.
Yeah. So I mean, Elon is helping out with the Starlink satellites, and mentioned the space. He responded with the SpaceX logo when the Russian head of the space agency said, "Hey, if you sanction us, we can't help the ISS from crashing to Earth." And he responded with like a SpaceX logo, like they'll come to save the day, which is nice. And so I guess moving on to we got to move away to stocks. Obviously, a lot of people follow us for stocks, so we'll talk about Tesla and maybe Rocket Lab and Lemonade a bit, and take a bunch of Q&A now after that. So for Tesla, it's hard to transition, but Tesla, all news is good lately on Tesla, I feel. Giga Berlin is about to open. It's getting final approval later this week, I understand, maybe. And Giga Austin, is the first deliveries already scheduled. People with VINs that show they're being built in Austin are getting deliveries scheduled already. That's great. And then the biggest news, I think, is the new China factory being announced in Shanghai, I believe, for another factory of 1 million per year production capacity to become more of like an export hub. And I think that's huge because China is their most profitable. Chinese cars built in China that are exported are their most profitable cars. That's what I've understood. Yep. And so that's huge. And then on top of that, we had that interview released yesterday, I think, with Bill Huang about the I'm sorry, not Brian Zhang.
Brian Wang.
Brian Wang. I'm sorry. There's a guy, Bill Huang from Pickwick here. I think my old employer commenting, "Hi, Bill." With Interactive Brokers, he's saying I think that's the location. But he mentioned that the battery supply constraints are no longer a problem. Based on his he's done some very extensive analysis on the Chinese battery suppliers and like CATL and some others, and it's just really ramping up the LFP batteries dramatically across the board. Where Tesla, the battery issue, the battery supply is no longer an issue whatsoever for Tesla, like it used to be. So that's kind of his thesis. that and that's very good news in my opinion too. So I mean, all great Tesla news. I mean, what are your thoughts on that stuff, Matt?
Yeah, I mean, I was actually shocked about the Berlin news that came over the weekend. Like, based on everything we'd seen and like the kind of continued litigation and just red tape around all the approval processes, I was just kind of preparing myself that like it would be good news if this launched in Q2 at some point. So for this news to come over the weekend that they expected to have I think it was a ceremony like the 22nd or something like that they're planning right now,
Yeah,
with final
22nd or
approval this
23rd.
week. That was completely shocking to me. So I thought that was a really great piece of news when you're kind of doing the modeling of how many deliveries can they do this year. And then the China news as well. That was not an announcement I think I or many people were expecting.
No. And that's
So
been
yeah,
I think that's been like that's been the secret, like that to me, that should be the biggest mover of the price, but it hasn't really moved. Like that's 3 times as important as Giga Berlin opening, in my opinion. But Giga Berlin's capacity is 500,000. This new thing's going to be 1 million plus more profitable being built in China and exported, So, as good as it is to get Giga Berlin on the map and say, oh, we got this feather in our cap of a big factory in Germany now. I think the extra million car production capacity in China is a much bigger news event in my mind. Yeah.
Yeah. I mean, they're both big, and the stock is still kind of consolidating around these levels. I mean, we had a nice 7% gain earlier yesterday. I don't know. I'm a little bit jumbled because of the the almost baby delivery we had yesterday, but yeah, I mean, the stock still seems really depressed relative to where I think it should be, but you can kind of understand that, I think, with all the macro uncertainty. Just as one kind of anecdote, I mean, was it last Thursday, I think, or maybe it was Friday when the actual invasion started? I mean, the markets absolutely tanked, but then they rallied. It was like a massive turnaround. It was like unprecedented turnaround almost. And so, as I was thinking about that, it's like, the market actually hates uncertainty more than they hate like a land invasion of a sovereign nation, which is kind of crazy. But like, if you look at the way the market reacted, it was, there was much lower prices when the market wasn't really sure what was going to happen. But once it's like, okay, Putin's invaded, I know how to think through that now. Then so you saw some money kind of come off the sideline. So I thought that was kind of interesting.
Yeah. It's just the uncertainty. I mean, I was reading a thread earlier today about the mind from the guy, Macro Alf, that guy Vuk had mentioned we follow for macro analysis. He gave a really interesting thread about like the big money, which is like the pension funds and such. And he was saying that the managers of that money, they're not incentivized to make more money. They're sort of incentivized to make a certain amount of money or a certain consistent return. And when there's certain signals, they're like, whether it's a regulatory signal or some kind of interest rate, they're kind of they just have to follow the model of in their own kind of systematic calculation to generate that return, so they don't get fired. So it was an interesting thread he put together, but basically it that's the big money that moves markets the most, whether it's money going to equities in general, like equity indexes, or to bonds for interest rates, long duration bonds or whatnot. So it's an interesting thread, but it's all about the certainty and uncertainty, like you said. Like once there's kind of more certainty and how to model out an issue, whether it's a problem, it's better to have a problem that's certain versus 50-50 chance of the problem being certain or not. Almost, it's like it's better to know that interest rates are going to go up 100 basis points in the next 6 months versus being 50-50. Is it going to go up 50 basis points or 100 basis points? We're not sure. Like it's almost better for the markets to know that it's going to be 100 basis points. That's sort of the takeaway. So I see Justin says audio issues. Hopefully no one else is having audio issues. So anyway, we'll move on to Rocket Lab, I guess. They had their earnings yesterday, Matt, right? What was your takeaway from the Rocket Lab? They had also their launch yesterday or 2 days, and that was successful.
Yeah, they came out with a lot of news yesterday. It was like 3 press releases or 4 press releases right in a row. But they've had really a string of good news recently. So they just got operational their new pad in New Zealand, which is phenomenal. I think they actually launched that rocket yesterday from that new pad, which was really great. Just background noise, it sounds like, apparently. So
Okay.
yeah, there's I've got a leaf blower outside. No construction this week. Sorry about
No
that,
worries.
guys. But getting to like the kind of core investment thesis. I mean, you saw their backlog grow 200% within 5 months. So the backlog, for those who aren't familiar, is just kind of like their new order. So a customer order for $50 million for launch services, or whatever the number is. They grew that just a crazy amount in a short period of time, and it's continuing to grow at a really rapid pace. So you start looking forward, and they've doubled the launch capacity of their Electron rocket with this new pad opening. They announced a new pad or a new launch site in Virginia for the Neutron rocket that they're developing as well. And so you look at the huge influx of orders that they're seeing, and then the fact that they're building out all this capacity to actually service that order, or service all those orders, and you can just kind of see a huge step change in their financial profile going forward. And they've also been pretty tight with their cost controls, I have to say. So obviously they're not really close to kind of reaching profitability quite yet, but I really like the way that they're kind of managing everything right now. The other thing that I really liked as I was kind of digging into it more is they gave some projections for Q3, for Q1, some guidance.
Mm-hmm.
And a lot of people have been saying, oh, I like Rocket Lab, but SpaceX is going to be so much more competitive than them that it doesn't really matter if they've got like Neutron or if they've got a big backlog. But I think people forget they've got this whole kind of components business that they're building out. It's not really just launch services. So their launch service revenue that they're projecting for Q1 is actually only 1/3 of the total revenue that they're projecting. So I think as these companies mature, as the rocket industry overall matures, the space industry overall matures, I think you'll see SpaceX like having the most cost-effective launch system for sure. But they're going to be really focused on colonizing Mars, and that is a gigantic task. What I think Rocket Lab is doing is really trying to focus on serving Earth with a variety of systems. So constellations that provide services to Earth is kind of like the end game that they've spoken about. But already before that, they're doing a lot of scientific work, and they're supplying components to other satellites and launch providers and reaction wheels and all this sort of stuff. And so that's a really big piece of their business right now that I think is kind of flying under the radar, or maybe that people aren't kind of analyzing as objectively as maybe they should when they just think, oh, they're a launch service company that's worse than SpaceX is like the critical way you could think about it. So I don't know, that's what kind of stuck out to me. But how about you when you're kind of listening to the earnings call or reading through?
Yeah, I mean, I just feel like it helps solidify our thesis that Rocket Lab is the clear second place to SpaceX. I know everyone's like, oh, SpaceX Starship's going to just change the game. Now, yeah, SpaceX Starship, is going to change the game, but there's also going to be a second place, versus like Tesla. There's no clear second place to Tesla. Like, who knows who second place is? It's all up in the air. Like, there's prototypes, but no one's doing the equivalent of going to lower Earth orbit regularly, meaning like mass producing a profitable electric car. That's sort of the equivalent of what Rocket Lab is doing to a much smaller scale of SpaceX, obviously, or whatever. But to us, Rocket Lab is the clear second place to SpaceX. And it might be a distant second place, but it's a clear second place. And in an industry that's growing, that's projected to grow to trillions of dollars by the end of this decade, like even if it's 1/10 or 1/20th the size of what SpaceX becomes, that's still going to be a massive return from where it is now at 4 billion market cap. That's the valuation of Rocket Lab right now, is around 4 billion. So all the other space like SPAC companies, that was in my mind a lot of noise. Like, there's a lot of cool technologies, but if you can't get to lower Earth orbit, that's the real Fermi's paradox moment to be a successful space company. If you want to be a big player in the future, I think you got to be able to accomplish that. And no one else has accomplished that. And then there's news of the Soyuz Russia space rocket that might get shut down if the sanctions go in. And I think Peter Beck commented saying something like, they're building Neutron as fast as they can, because someone asked them in the earnings call or somewhere about, if Soyuz can't go to the International Space Station, is Neutron able to do that? And he said, we're building as fast as. So there's going to be opportunities for Rocket Lab to fill. It's not going to be 100% SpaceX. The space industry is not going to be 100% one company. Yeah, it could be even 80% SpaceX. I don't know. That's, but there's still going to be gaps to be filled by other launch providers, and militaries or governments are not going to want to rely just on one private company only. They're going to send some amount of orders to, a secondary contingency company from time to time or whatever. And Rocket Lab, at the very least, fills that gap in my mind very strongly compared to anyone else. And I think they're just showing it more and more here. And Peter Beck, I believe, and that's the low end of the totem pole I see for Rocket Lab. I think they have a lot more opportunity than just that too.
Yeah, no, I completely agree with you. And we've talked about the strategic redundancy before, but it's so important, especially with, government or defense payloads, to have multiple different providers to be able to provide those launch services. I mean, that's something that I think is never going to go away. I think even if Rocket Lab was 10 times more expensive than SpaceX, but they were the next cheapest option, I'm sure at a minimum they'd continue to get government contracts just to have that capacity.
So absolutely. So let's move on to Lemonade a little. I mean, there's a lot. People will go over Q&A. We're going to leave like 20 minutes or so for Q&A. So we'll just briefly go to Lemonade. They had their earnings last week. I mean, what were your initial impressions, Matt? I had a chance to listen to the earnings call yesterday. I was away on vacation much of last week, but I saw the report and listened to the earnings call yesterday. But what was your impression, Matt, of the numbers?
Yeah, so the big news was a miss on loss ratio. The loss ratio was like almost 100%, and the reason for that was some historic claims that they had to kind of remark and kind of readjust. So they were a little bit cagey with the kind of reasons for that. They gave the example of like $1 million homes that were like a total loss, and when they had reserved for maybe a partial claim instead. So that was, I think a huge miss. So the market reacted very negatively as we saw, and as you could imagine. But from my perspective, and I think we were saying this recently, even before the earnings report came out, like the kind of short-term loss ratios are not as important of a metric to watch as compared to things like customer growth rate. Now, I do think if they can't turn that around, it's indicative of maybe their AI or their kind of quoting software. Maybe it's not as good as they were claiming, or maybe they don't have any sort of strategic advantage there. So to the extent that this loss ratio that we saw in Q4 is indicative of kind of some systematic irreconcilable issue that they have with their quoting system, then yeah, that could be an issue. But my sense from kind of listening to the call and trying to be as objective as possible is that it's more likely this was kind of a one-off that they've learned from. But it's going to take, I think, several subsequent quarters to kind of bolster that counter argument that they've actually learned this lesson, and loss ratios are kind of coming in at a more normal level. But assuming that all pans out over the next couple months, they were also saying we've essentially kind of hit this critical mass where we can stop worrying about kind of building up infrastructure and instead worry about kind of efficiently using it. So they think 2022 now is going to be their year of peak losses, and from there things will really turn around, and you may have this kind of inflection point of profitability at some point in the next couple of years. So it wasn't the best earnings report by any stretch, but I do think with where they are right now, trading at like 1.2 times cash, or maybe now after they've recovered a little bit, maybe it's like 1.3. The asymmetry opportunity is just gigantic in my mind. The market, nobody really believes that, at least the market does not believe that they're going to be successful in kind of turning this ship around and gaining significant market share. But if they can do that, and I think they had a lot of good stats there on kind of customer growth and top line growth was reasonably strong. So if they can do that and kind of grow premium per customer in the way that they have been, I think there's a huge amount of upside here. So
yeah, it's still heavily shorted stock. I mean, I'm looking at the Interactive Brokers platform with the shortable shares only being 84,000 shares available. Yesterday, I think there was 0 shares available to short. So they found the stock loan desk found some shares available to short, but it's got a 12.77% borrow fee, which is the highest I've seen in it in a while. It used to be like 4% or 5%. Now it's going up to 12.77%. And it's 100% utilization. That's the utilization column shows 100%. So if you own Lemonade stock on Interactive Brokers platform and you participate in their stock yield enhancement program, then there's a 100% chance that your shares are being lent out at the 12.77% borrow fee, and they split that in half with you or whatever. So that's pretty crazy. Most stocks that are hard to borrow are, they don't have the 100% borrow fee. Another stock is Matterport that's got a 100% borrow fee, but 100% utilization was called 1.31. I'm just looking. Another one is DNA, Ginkgo Bioworks, 100% utilization and 42% borrow fee. That's even more shorted than Lemonade. That's crazy. But even ARKK, that's only got a 98% utilization, 4.52%. There's a lot. Anyway, these are some stats I'm rattling off, but it's a very highly shorted stock. Still, that's our point, and there's a big candidate for a short squeeze at some point. And I think Daniel Schreiber said like the next 2 or 3 quarters they could have worse, lower, bigger losses each quarter. The next 2 or 3 quarters before they start turning around the ship to start becoming profitable again. So to me, that was one takeaway I took from the Q&A, where it's like the next 2 or 3 quarters, each quarterly report could be another buying opportunity after each quarterly report to buy more or accumulate Lemonade shares. It's probably going to disappoint each of the next 2 or 3 quarters, but at some point, it's going to turn around, we think. And the thing is, if this could be the best time to buy it if the whole tide of the macro markets for tech and growth stocks recover, because that's been driving the price more than anything, obviously, in all the tech stocks. But if the macro markets kind of recover, sort of in terms of like the tech stocks, then Lemonade will be along with that tide and go up. So $24 a share, or 1.5 billion market cap, or whatever it is now, I think. That could be the low, but if the macro market stays static to where it is now, let's say, then the next 2 or 3 quarters, each quarter could be another buying opportunity after the earnings report until they turn things around. But 1 or 2 years out is when we'll find out, I think, if it's successful or not. And it's all really car insurance is the big thing. So once they finish Metro Miles acquisition next quarter, and then they implement it, and it'll take a couple quarters to kind of see the results. And that's what it's all about for Lemonade, is the car insurance.
Yeah, and I mean, I think they've got a little bit more wiggle room with their home insurance too. I mean, the majority of their products or their policies are those lower price policies, renters in particular. But if they can, they had these huge loss ratios on home insurance, obviously, this quarter. But if they can figure that out, and then they are successful in ramping, their home and their auto insurance policies, like those are drastically higher revenue opportunities. So you could see, I just feel like there's this huge potential that you could have growing customer base, amplified by growing revenue per customer. So it's I think my confidence maybe dropped slightly after that earnings call, to be honest with you, that they can figure it out. But I had been around like maybe at 85%, now maybe at like, I don't know, 70% or something like that they can actually turn this around. So
yeah, I'm at like 50-50 still, but it's asymmetrical, like you said. Like if they lose out, they slowly dwindle away or get acquired or something. But if the 50% chance that they succeed works, it's like a 10x or more return in my mind in the next few years. So it's exciting to see how this plays out. It'll take time. The next couple quarters could be painful. So we'll have to see. All right. I guess we'll just go into some Q&A now. Let's do the next 20 minutes or so for Q&A. I know we've gone on a lot about all kinds of stuff, macro markets and Tesla. So Alex, you want to post the questions here? Let's see. The first question is from Life at 130 beats per minute on Twitter. I still love that username. Do you think the reduced Model 3 wait times are due to my Model Y cannibalization, stock market correction, or something else? What do you think, Matt?
Yeah, I think cannibalization, maybe it's a little bit less likely to me, but it could be. But I think they're continuing to ramp up production. So I don't know. I tend not to put too much weight into kind of near term movements in this. But I don't think it'd be stock market correction. Clearly, the Model Y is a more popular car than the Model 3, and so that's growing. I guess there could be some cannibalization, but I don't know. I don't have too many, I guess, concrete thoughts on that. What do you think?
Yeah. How do we? I mean, I could be in the dark here, but how do we know that the Model 3 wait times are getting reduced, across every, maybe it's just a performance version of Model 3s are getting reduced wait times or something, or maybe just one region in California, like in the history of Tesla, that, a lot of times people say, oh, the times are getting reduced, but in reality, it's just like one category of the car has reduced because it's more profitable for Tesla, or that's more logistically deliverable at the end of the quarter or a certain time or whatnot, or a certain variant with the dual motor only is being reduced because the single motor is hard to supply or something. So it's hard to say. Is that for sure, like across the board, all Model 3 wait times are being reduced? Is that, I don't know. I mean, I'd have to start
So
with that.
I'm just looking right now, and at least in the U.S. generically, it says the Model 3 performance is March, the long range is May, and the rear wheel drive is June.
Okay.
So I think that's kind of consistent with the having shorter lead time for the higher end variants. That we've seen that historically. But there's also this kind of delivery wave that they've historically done, which they continue to do, where they try to export from Shanghai and from all their factories to the kind of the furthest out regions in the beginning of the quarter, and then they'll deliver to California or to Shanghai or wherever in the third month of each quarter. So
and
I'm not sure that
seasonally isn't it stronger delivery? I can't know. I don't forget which quarter, but there's a certain quarter where it's typically slow. If it's like the second or third quarter, I can't remember. But there's seasonally just the demand, consumer demand in general for upgrading their cars or switching in for new cars is typically low. So what if maybe this is something to do with that too for this particular quarter? I don't know. But there's a lot of potential factors, I guess. Yeah, I'm not sure though. It's a good question to consider, think about. From Mark Gomez Tejeda. You see any M&A opportunities for Tesla, merger and acquisition opportunities for Tesla in fiscal year 2023 can be generating above 40 billion in cash flow per year. I only see dividends or share repurchase or huge M&A transactions. I agree. I mean, I think they're on the verge of being a cash cow, especially if full self-driving kind of matriculates here and gets turned on widespread usage. They're going to have tremendous amounts of cash, a war chest of cash. I see share repurchases. Maybe I'm not sure Elon wants to do any big M&A transactions. I mean, I could see him doing small things like they did for Groman or Maxwell Technologies for particular niche technology or particular niche engineering team or something. But I just don't see them making any major multi-billion-dollar, purchases of like Stellantis or Ford or so. I think that's way too messy and just not a good. I just don't see Elon doing that. What do you think, Matt?
Yeah, I don't think so either. There's actually one company I've thought for like a year that Tesla probably should buy. It's called NLX, ENELX. It's a subsidiary, I think, of an Italian company, but I've actually worked with them in the energy space before, and essentially they're like experts in global energy markets, and so as I've said a couple times before, like the energy industry is just very unique. It's very kind of siloed geographically with like huge amounts of regulations and vastly different market structures in different regions. And so NLX has kind of they've got relationships with all these regulators, and they're really great at kind of aggregating assets. So, when I was managing a wind farm, I was speaking with them about like partnering with other wind farms and solar farms, and they would essentially kind of like aggregate them together and sell a combined kind of energy and capacity product. And there's all sorts of reasons why you can make more money when you do it that way. So without going into huge amounts of detail, I think that's something that Tesla could really benefit from. They're trying to really build up a lot of that capability by scratch. But for my mind, Tesla has like this huge hardware base of energy assets that's going to like scaling globally, but they don't have the kind of backbone, energy market infrastructure to handle, markets in Texas, markets in California, markets in Australia, markets in Germany, and they're drastically different. And so how you kind of aggregate those assets, like actually registering with each of the regulatory entities and like getting approval to sell like an aggregated like virtual power plant, like that's not a small deal. Like that's a very heavy lift to do, and you can't just do it all with software. You need like to file actual like applications that are like intensive. And so I think partnering with a company like NLX, or just frankly acquiring them, who has all those existing relationships, I think that would allow Tesla Energy to scale a lot more efficiently. So I'd love to see that, but I don't think it's on the horizon.
Yeah. And just going back to that question about the wait times for the Model 3, we have some very intelligent followers and listeners commenting that know some of these details better than we do. And they're saying that it's because of the wheels, the sports wheels have the shorter wait times, or maybe you take the sports wheels off, the wait time is October. One guy, Andrew Bazile, said in Southern California, they have a family member whose base plus white interior Model 3 wait time has gone up by months. It was February, March, now it's June and July. So yeah, you have to account for, with the Model 3 wait times, all the different variants. Sometimes certain variants or certain wheel types, they have an extra supply they need to get rid of, or so they'll advance those quicker. Maybe they're higher margin or whatnot. So just good information here. Lots of people adding lots of good content to our stream on the chat here. From Farzad Misabi. Oh, Farzad, how's it going? Thoughts on Tesla getting a profitability boost in Q1 due to Hertz deliveries? Anecdotal evidence shows Tesla shipping quite a bit of them, and shipping in bulk should generate more profit per vehicle. This is a very good question. I saw it earlier, actually, Farzad. I was thinking about it, and you might know more than us, given your insight working at Tesla in the past. So maybe the fact that you're bringing this up means there could be a significant boost. My initial take was like, okay, maybe the deliveries are a little more efficient, but maybe that just adds $500, of costs, or maybe $1,000 at most of cost per car, which is still good, but it's not like the difference of a performance version versus a standard range version in terms of profit margins. But still, I think it would be helpful, whether it's a marginal help or a big help. Maybe it's several thousand per, delivery expenses shaved off when it's a bulk delivery like that. I'm not sure, but I would guess it's more like 500 to 1,000. Let me do the next question. Matt's relocating because of the sound. So we'll go to the next question here. From AJ Price. Question: what do you guys see as the main leading indicator for Lemonade on whether it will be successful? Yeah, I mean, this is a great question. I think they have enough cash in the bank to go on for, a couple of years at least, maybe longer, I think. And so next, 3 or 4 quarters, the main leading indicator is the car insurance to me. I mean, how fast can they integrate the Metro Mile technology and everything they've bought from Metro Mile into catalyzing their own car insurance being pushed out to all 50, I think they said 51. They think of it as 51 states, 50 states plus Washington, D.C. So right now they're just in Illinois. And so in a month or a quarter or two, once they're fully integrated with Metro Mile and get all the licenses for all the other states that Metro Mile brings to the table, then we should see shortly after that, Lemonade car insurance being offered to virtually all the other states in Washington, D.C. And it probably takes 2 or 3 quarters from that point to see if and when Lemonade will be really successful or not with the car insurance. So that's the big, moment of truth for Lemonade in my mind. I mean, even without all the other stuff, home insurance, homeowners insurance, pet insurance, all that stuff is kind of like a little bit of a stable kind of like, source of business revenue going on, which is good. But really, if you want them to be a 10x return, they're going to have to succeed in car insurance to some degree. So that's what I'm keeping my eye on the most is the car insurance the next year or so, how it progresses. All right, let's go to the next question. From Martin Muldoon. Question: can you guys walk us through the impact of a plant opening on Tesla's financials? What new expenses hit the income statement? What expenses are already being accounted for? Matt, are you back with us? This is your wheelhouse question for Matt. Yeah, I hear you on Twitter Spaces, but the YouTube, I guess, is not showing up. Matt's just reconnecting to his YouTube audio because he's on
All right,
Twitter
can you hear me
Spaces.
now, Alec? Is that coming through?
Yep,
All right.
good now. We hear you on
Well,
YouTube and Twitter Spaces. Go on.
sorry for the continued issues. We're supposed to be done with construction now, but apparently that's not happening. Anyway, so when a new plant does open, there's a couple different things. So the biggest thing that you would probably think about is the capital expenditures. So like last quarter, I think it was $2 billion that they spent on like new plant and equipment and everything like that. So let's take Berlin for example, and let's say it cost Tesla, I don't know, $5 billion to build that plant. And all the property, plant, and equipment, like all the machines that go in there. Those will go on the balance sheet, and then they hit the income statement through depreciation expense. So they'll have to assign a useful life to the equipment, and that can either be over a period of time or it can actually be over kind of units of output. But let's say it's like 5 years of time, so then you'll kind of depreciate that $5 billion over 5 years, and so then that kind of hits your operating expenses as depreciation expense. Then within the plant you've got some machines and the labor, the actual employees who make the products themselves. So that all those expenses that are kind of directly attributable to the actual units coming out, those will generally run through your cost of goods sold. So that will kind of hit there, and there's generally speaking, because you've got like a big chunk of depreciation with a plant opening and low volumes, you've got and frankly you're just less efficient at making the cars, so your cost per car is probably a little bit higher as well. You're going to see a gross margin hit and an operating margin hit from that new plant opening. But then you look at the overall company and you look at like the supercharger network, the costs of that are relatively low, and you look at the accounting staff, and you look at like all the headquarters staff, and Andre Carpathy and his whole team, all those costs don't increase as a result of opening a new plant. So generally speaking, as that plant gets up and running, it should improve the operating income of or the operating margin of the company, because their gross margin will increase faster than their operating expenses will increase. So generally speaking, that's how it should work. I could go into a lot more detail on that, but I think we'd lose half our audience.
Thanks, Matt.
Yeah.
From QB and YouTube chat, question: if Lemonade is using AI, which is supposed to be more efficient, why are their loss ratios so extremely high? You think they can be successful in time frame to achieve this? Yeah, I mean, I know some people think the Lemonade AI is like a secret sauce or secret weapon. I'm indifferent to whatever Lemonade AI is, to be honest. Like I don't think that's the secret sauce to me. I know some people, Matt might think more strongly of it than I do. I think that's close to a commodity, whatever their kind of AI software is, that other insure tech providers can try to replicate that same AI kind of chat bot or whatever it is. But I think the real secret sauce of Lemonade is the entire backbone infrastructure they're building out that they control, vertically, the whole stack, from A to Z. And except for, I think, life insurance, they piggyback off of some other New York Life or something else. But the fact that they're building this entire ecosystem themselves, and they might integrate among the best with whatever AI, such a commonly used word, whatever software they've implemented might be among the best of what's out there in the insurtech world. But I think the fact that they have their own infrastructure allows them to be much more flexible with that software and kind of update it anytime they want very easily across the entire backbone, without getting approvals of whoever the legacy provider is that are white labeling or integrating with the white labeled infrastructure they're using. So that's what I think the secret sauce of Lemonade is, and just how they've architected the formation of their business, and the fact that they have a good software technology team behind them just allows that team to really make use of that backbone infrastructure in a more efficient way than anyone else. That's, in a nutshell, that's sort of what I think about it. What do you think, Matt?
Yeah, I agree. I mean, I think they're very clearly not more efficient right now. I mean, that they're much worse than industry average in terms of their loss ratios. So I think you have to believe that they're working on that, and they're trying to get back to those kind of levels of high 70% or so, mid 70% or so loss ratio. And if they can do that, then I think the real advantage they have is that they can scale their revenues quite drastically from where they are right now, while keeping operating expenses relatively flat. I mean, to me, that's their benefit, is kind of a scaling of operating, or of revenues, and that the operating leverage that can bring, not necessarily the AI being amazing at quoting things. Now, over time, I do think maybe that could come into play more. But right now, I mean, even what management is saying, they're not saying they're going to leapfrog the industry in terms of getting loss ratios down to like 60% or anything like that. They're just saying they want to bring it down closer to industry average. So clearly they're not more efficient right now. They've got less data than the historical insurers have, but I think it's reasonable to presume that should, as they get more data and they get kind of more experience, saying, okay, we had all these huge losses in Q4. What did we miss, and how can we better flag that? So I think they'll be improving the quoting software and kind of their. It should lead to some improvements, but I agree with Emmet that that's not core of the thesis here.
Yeah, they're still kind of in growing pains mode as you have a company's kind of evolution. They're, sort of like Tesla was in its growing pains for many years, like trying to get profitable. Lemonade's kind of in a similar spot, but, not producing, hard tech, obviously. It's all soft tech and insurance services. And I feel like, they're close to that tipping point of, maybe like Daniel Schreiber said in the earnings call that, 2 to 3 quarters is what he expects until they're kind of at that tipping point where the pendulum starts swinging back the other way, where they start becoming more and more profitable over time, or less and less unprofitable and then profitable soon after that. So, yeah, I mean, you have to watch out for that guidance and see how accurate that is, I guess. From Curtis Johnson, if Lemonade gets all the state licenses sorted, should Tesla take their big pile of cash and acquire them? Yeah, I mean, that's a good question. I don't think Tesla needs to. I mean, they could acquire Lemonade for a tenth of their balance sheet by that time, or less, or
Less, yeah.
yeah, by that time. So I don't think Tesla needs to acquire them. I see Lemonade as, I think Tesla likes to build their own kind of platform from scratch, and they're already like pretty far into it on their own. I do think that Lemonade could be a great insurance provider for all the non-Teslas out there. I mean, I think people who own Teslas are going to be more likely using Tesla insurance than Lemonade for sure. But people who don't own a Tesla, Lemonade is going to be a very good solution or option for them, I think.
Yeah, I mean, if anything, I think Tesla maybe should have acquired Metromile, because I mean that was
Yeah.
like buying all the licenses. That was a hugely valuable kind of strategic move in my mind, that I think is still not properly valued by the markets. I mean, the potential for that to drastically increase the revenue potential of Lemonade is, really huge. And so that would have made more sense for Tesla to acquire, in my mind, just purely buying the licenses. Instead, Tesla's going to have to kind of do that state by state, and it'll be a painful process. I mean, we're already kind of seeing that they're picking the fight with California over, the use of driver data. So it's going to be a slow process, I think, for Tesla. But for Lemonade, I do think it's there's potential that you could see a kind of huge change in their revenue per customer if they're successful in kind of cross-selling that product to their other customers.
Yeah, absolutely. All right, last question, and then we'll end this. Let's see what the last question is. It's from Handyman IRD. What do you think about Astra? Do you feel Astra might be possible to establish as a solid player in rocket launch space industry? Yeah, I mean, people have been bringing up Astra a lot to us. They tried to launch another rocket recently that was unsuccessful, I believe. So it just shows how hard launching rockets to lower Earth orbit is. And Astra's trying to launch like really small rockets for really small satellites. And I like their thesis that satellites are going to keep getting smaller. That was also sort of Peter Beck's thesis originally in doing Electron, is that he knew that satellites would continue to iterate to get smaller, so you don't need as big of a rocket to launch them into space. So it's possible, hopefully Astra figures out how to launch things into lower Earth orbit, but they could be far away from doing it reliably. You know, like I don't think they've launched anything yet to lower Earth orbit. I think they failed like all 3 or 4 times they've tried, or maybe half succeeded one time. I can't remember, but they could be a lot further away than people think to getting things to lower Earth orbit. I just don't know. Like maybe they're on the cusp of it, and once they do it, they can do it reliably going forward, or maybe they just don't have the chops to figure it out, and maybe it's just a special kind of engineering team that only SpaceX and Peter Beck and his team have been able to do. So it's hard to, it's just a lot of unknowns with Astra. I think it's got like a 1 billion market cap. I'm trying to pull it up, which, you know, it's small, but they have a long way to go if they want to catch up to even Rocket Lab, I think. What do you think, Matt?
Yeah, I agree. I mean, there's this concept within the space industry of a vehicle's heritage. So essentially, how reliable is it? You know, and Falcon 9 clearly kind of has the best launch heritage right now. You could argue like Soyuz or some of the ULA products as well, but those are just like drastically more expensive. But if you're developing, you know, a very expensive satellite, or frankly just any satellite, you need, your business relies on, you know, getting your satellite launched. You don't want to put up with a potential, you know, 12-month delay if, you know, Astra or whoever can't get their technology figured out to launch to low Earth orbit. So yeah, I think if they can figure it out and get to start delivering payloads to low Earth orbit reliably, then yeah, maybe they'll figure it out. But there's a huge amount of risk there in my mind. Whereas, you know, Rocket Lab is still valued at like 5% of SpaceX, even less than that now. But they've got I would say very enviable, you know, launch heritage. So that's really valuable to operators within the space and the space industry. And so I think that's for the risk reward payoff of, you know, a very small cap company right now at, you know, just over $4 billion. I'd rather put my money with Rocket Lab than, you know, try to make a bet on third place for something that's under $1 billion market cap. Yeah, maybe there's a higher reward there, but to me, the risk reward is not nearly as attractive as it is with Rocket Lab.
Yeah, I agree. I mean, Astra, a lot of other space SPACs came out, you know, just and got great evaluations in the last, you know, 12 months or whatnot. And yeah, I mean, everything else space industry related is like building prototypes in electric vehicle industry in my mind. It's like, you know, a lot of companies can build these prototypes, but to mass produce them, like to produce thousands of them efficiently and sell them for any kind of profit margin, you know, in a way that the customers like the product and stuff, that's very hard. And only Tesla's achieved that. And to me, that's like SpaceX has achieved that in the space industry, that type of milestone, or, you know, Fermi's paradox hurdle or whatever. And Rocket Lab has achieved that, sending things to lower Earth orbit consistently and reliably, but no one else. So until Astra starts sending things to space, you know, a few times in a row, you know, consistently, they're not even in the conversation for me.
Yeah.
All right. So that's great. Questions by everyone. Next week we'll be back, and hope our concerns about Putin and nukes that we talked about in the first 20 minutes don't become more serious. Hopefully Ukraine will pray for them and the people there, and even the Russian soldiers who don't know what they're getting into. Just a terrible humanitarian crisis across the board for Ukrainians and even the Russian soldiers who are kind of forced into this without knowing what they're getting into. So sad situation. And hopefully next week, maybe there'll be some good news coming around of ceasefires or something.
Yeah. I mean, it's first and foremost, this is a humanitarian issue. So our thoughts and our prayers are definitely with the people of Ukraine and frankly, everyone who's impacted by this. So I'm hoping for a peaceful end, even though we're kind of preparing for the worst case scenario.
Yeah. All right, guys. We'll see you next week.